Friday. Enjoy that live. It was cool because we're hanging out for about an hour on Friday. And you saw how I was kind of not really having to force a trade, but when we're talking together, it lets you collect your thought and build your narrative. Like I always try to preach, build your narrative. So, and you don't always have to be taking a trade every second, but I wanted to go over Friday's trading day and the two opportunities that I saw. And the reason why I'm on this Google page is because I believe that some of the price action was textbook, meaning that there are certain things that repeat. For example, I like to trade a lot of the ICT concepts like fair value gaps, Fibonacci retracements to rebalance the inefficiency, and we target liquidity. Yeah, so I was watching the process and it was cool. And I made some money. Yeah, absolutely. And not every day you make money, but it's when it's clear, it's easy to follow along, right? And that's why I try to provide for you guys. So going into what Friday's price action, one of my favorite price actions is when there's something called the three drive pattern, which means that we look for a fair value gap after a price comes up and takes out liquidity. And then when we dump, we create these fair value gaps. Oops, let me zoomed in too much. We create these fair value gaps. When I zoom in, it looks like that. But if you could see right here, we had one and price likes to come and sweep liquidity and continue down after we make this big candle push down. Let me try to find a different example. Here's another example where you see a three drive where we're in a downtrend, right? That's the first thing we have to establish is that we're in a downtrend. But when price starts pulling back, that doesn't just mean reversal because on the bigger time frame, we're looking for a downtrend. So what do we look for to take us down? We look for something called a three drive where we have a high, a higher high, and a higher high, but we have a structure that is pushing down, and that's the breakage structure that I always try to talk about. Once we have a breakage structure, we look for fair value gaps, and when price does corrective activity into discount, that is where we look to enter trades and target sell side liquidity. My favorite is shorting because when we short, these candles really drop down very quickly. Whereas when we're pumping up, it's hard to get in because you don't know if you're going to run into a three drive that liquidates you, right? So that being said, I rewound where we were at open, market open. And on this left side, we have the 30 minutes and we have NQ, the 5 minutes. They're both going to be replayed, but when I do that, I link them together so you could see how the 30 minutes and the 5 minutes look at the same time. When we talk about uncoupling price action, we're talking about multiple time frames giving you the narrative that you want, right? So right here we have 6:30. That is Pacific time, market opens. So if we're looking that we had multiple rejections here, we had low resting liquidity, which is all liquidity when price goes up slowly without all those big candles like this, then it leaves liquidity available to the downside for corrective activity. So what do I look for on the 5 minutes right here? Well, I like to short, right? So what I look for is I look left before I look right because I know where we are right here. But I look left because is this a pullback or is this a reversal? So what I look at is fair value gaps. So I look over here. There's one fair value gap right here. And there's no fair value gaps right here. There's a fair value gap right here. But where are we? We're just slightly above it. So fair value gaps are what? It's liquidity. So I mark out fair value gap liquidity right here. There's this tiny one right here. I'm going to put blue. So it extends it all the way over. And for me, I want to see if when price gets there, or if price does get there, do we reverse or do we come up higher? And if we come up higher, where do we have liquidity? I look at the 30 minutes. And there's one right here, right? Liquidity, relative equal highs. So I'll mark that out. and I'll go back to the 5 minutes and I'll look. Okay. So as this is going, let's look at how the 30-minute responds versus the 5 minutes. Okay. So let's go candle by candle and see how price reacts there. Okay. See the 5 minutes? We had that fair value gap that I wanted to go to. And what happens after the price gets to the 5 minutes? It starts rejecting, right? But let's look at the 30 minutes. See the comp, right? This looks bullish still. We need an actionable signal to really take us down. And we just started the new hourly candle. It's rejecting. Boom. All right. So this is the next candle. Rejecting again. Rejecting. And if we do reject, where do we go for? All right. That's why I like to use different indicators. Like I mentioned in the last class or on Friday, is that we have session lows or gap fills. If you're trading QQQ, we look for gap fills or highs and lows of previous day. But for NQ, I look for session lows. We got London low right here. I'll mark out in red. So that's a liquidity. And we have Asia low. I'll mark out in blue. And the very lowest one, I'll mark out in white because that's external low. But does it have to go external low? No, it doesn't have to. But I'll mark out in white because after that, that'll basically show that we're gonna probably come all the way down and reverse maybe, right? But you want to go for the closest targets first. So as we see, we're building a red 2 up on the 30 minutes. And now we go back to the 5 minutes and we're looking a rejection. All right. So the only way I can go for shorts is if we really, really make a push and try to take out these lows right here. And if we displace lower, the 3 drive, let's look at it. I'm looking for rejection on a fair value gap up here after a pullback. And I want to break a structure perhaps. And I want to price to somewhat come up. It doesn't have to look exactly like this, but this is the concept. We need a rise, we need a structure low, and I need it broken, and I need a fair value gap in order to take us to whatever liquidity I'm looking for. But I need to break a structure first. You can't just enter shorts on the first big candle because look at this pullback, it'll take you out. So we want the break of structure and a return to any fair value gap to take us lower if my bias is down. So let's take a look right here. This is still 10 minutes. So let's see if we get these big candle reversals. All right, this right here on this side, this will make it a 2 or 3 down or 2-2 reversal. This is the 30 minutes. Okay. Oh, we did not make it a 3. It's still a 2. All right, but we are getting big rejections right here. Okay, so let's take a look at the one. Oops. Take a look at 30 minutes here. Oh, wow. I think it fast forwarded a little bit. But as we could see, right, we're getting lower highs. We had on the smaller time frame, this is the 1 minute. Right. On the 1 minute, we want to target these lows. Okay. Even lower lows. There's this low right here. Okay. This low right here. That's external. Low resting liquidity. So when price comes up, right, do we break structure over here? Kind of. We had a swing low right here. It was broken. We closed below it. And we had levels below. So eventually we want to see rejections of fair value gaps. So we had this rejection right here, for example. You see how that one held and we came down. So now that was showed that it was supporting and we continue to make lower lows. Let's keep going. After we we came down, we're pushing right back up. Do we have other fair value gaps perhaps? Or is this going to be a fake out? Let's see. Okay, we're establishing that we have fair value gap right here. So we had this big rejection on the 30 minutes, coming right back up. Do we have more fair value gaps to show us that we can come down further? We have one more right here. Mark that out. And if we get a rejection here, now we know that we have a lot of liquidity below. See this 1 minute right here? I'll mark this one out in red this time so you could see smaller time frame fair value gap. And now does it start to look like another 3 drive where we have a high, another higher high, right? Then we look for a market structure or break of structure. Boom. We had that break of structure. You see how we rejected right here? We had a break of structure. Another, now we're doing the break of structure from right here. Oops. Break of structure right here. BOS. Okay. So now we come, let's see how a price reacts like now. We come to this fair value gap. We come up a little higher to this fair value gap right here. We can delete this right here. Break a structure, 3 drive, break a structure. Do we reject this area now? All right, 3 drive, break a structure. Do we reject this area right now? So what we can do is go to maybe 30 seconds. We go to 15 seconds. Break a structure, 3 drive, 1, 2, 3, break a structure. Do we rebalance to inefficiency? I mean, do we rebalance to equilibrium, discount? We rebalance discount right there. And do we rebalance to a fair value gap? Right here. Tweezer top on the 30 as well. We had the tweezer tops on the 30 as well. And tweezer tops is what? A liquidity grab, liquidity sweep. Okay. So we're looking at here. You see how that fair value gap rejected? It went up a little higher than you wanted it to. This is the 15 seconds though. So let's take a look at the 1 minute. The 1 minute, yep. Came up, rejected. Break a structure. And where do we go? We target the liquidity below. Okay. So this presented that opportunity where we had a big rejection on the 30 minutes to a red 2 up that I always try to tell you. Red 2 up or green 2 down. Red 2 up or green 2 down. Red 2 up, rejection, tweezer tops. We're looking for the PMG. We have the London session low, Asia session low, and this will be the last target if it does choose to go there. But that's where you start looking at indicators, right? We're coming down. We're a little bit oversold, but we have low resting liquidity here. So we would expect price to eventually dance its way down to sell side. Boom. All right. That's why you see, and once it hit London session low, you see how we created a green 2 down. But it's still early because of where we are. This is at 8 o'clock, so we still have the whole entire candle. So that's why a green 2 down is not a green 2 down until this closes. It just started. So let's take a look what happens. Okay. It didn't turn into a green 2 down after it closed, right? Once it closed, it turned into a red 2 down. And that's why I said a red 2 down can go either way. A green 2 down is more bullish. A red 2 down can go continue down. Okay. So that's why when we had this displacement down, we tapped liquidity. That's where people took their profits. And when price came back up, what do? We ran straight into another fair value gap right here, bearish fair value gap. And if you turn on the midline, make it in white, turn on the midline, you see how we were rejected consequent encroachment. We did not close above it, so it shows it's even weaker. It shows that it wants to continue further down. And that's why I have these Asia session lows. So if that price does continue down, we're looking for a reason for price to come down. Oops. We had another sweep of liquidity right here. So we're analyzing it. We had another sweep of liquidity right here. Sweep. Another sweep of liquidity down here. Same thing. Sweep. You see how price reacts after it sweeps liquidity, but on the 30 minutes, it shows that we have liquidity here. It shows that we're still bearish, but we could come back up higher maybe and then drop. We'll see. But that's what I'm looking at with both of these candles. Okay. And look at this. Is this another 3 drive that's setting up? 1, 2, maybe, perhaps. Or maybe just sweeps. That was a 3 drive. And price comes. Does it take out liquidity after that? Boom. You see now the 30 minutes looks super red. But look after how price reacts after it sweeps liquidity. You see that now in the 30 minutes, it hasn't closed yet. This one's about to close in a couple more candles. And now look at this. What did I say? When it's red 2 down, there could be a chance it continues or reverses. But when it's a green 2 down, look how price reacts. That means this liquidity is taken. We get a huge rejection. That's why it's important to wait for the bigger time frame candles to close. So now it looks a little bit more bullish. Oops. Now it looks a little bit more bullish. All right, as we took care of the objective down here. And that's why when we had our trade on Friday that we entered, right, we had this big break up. And I said that I'm looking for price to take out these relative equal highs right here. So understanding that, now we can go to, well, actually we continue. So when price started coming down, what did I say? We had our first break of structure after we swept liquidity down here. We had this swing high right here. And we broke structure. We had the relative equal highs right here. We had this 1 minute fair value gap right here that we rejected again. We had this 1 minute fair value gap that we rejected again. And what happens after we sweep liquidity and we do this type of pattern? Remember we talked about how it was starting to look bullish? It looks bullish because we have a low, a lower low. And now if anything, if there's any low set right here, then that creates an inverse head and shoulders. Head and shoulders looks like this. We have a high, a higher high, and anything here is lower. Anything here is lower than here. So if we are lower than here, then that's a high, higher high, lower high, and that's a bearish pattern. Just like this is a bullish pattern. Break a structure. So what do? We took the lows from this swing low that broke the structure, and we took it to the highs. Remember? And I said over here, do we have any fair value gaps? Do we have any fair value gaps that will take us to our relative equal highs? This target right here, relative equal highs, okay? Fair value gap, 50 fib, equal highs. And that's why I said we're going to set a limit because this is a green 2 down on the 30 minutes is bullish. Big rejection right here after we swept Asia session low. We had the 3 drive that we pulled back on. We could still be bearish overall, but price needs to rebalance and do some corrective activity in order to do so. So that's why I put long at the 50%. If, however, there is a fair value gap. So we look, there's a fair value gap here at 50%. And we're going to mark this out in blue, bullish fair value gap. Bullish fair value gap at 50%. And we can also look at the 5 minutes. Same thing. We had a fair value gap here at discount. And that's how I I created that narrative by using 30-minute time frame, red 2 up or green 2 down to change direction. Red 2 up gave a lot of opportunities to target liquidity. Now we sweep liquidity, and now we have green 2 down. Our target liquidity is rebalancing to either swing highs, equilibrium, or fair value gaps. Okay, so now we're looking at right here. I said tap me in here, but stop loss would probably be below the candle that created the fair value gap in the discount range, targeting here to relative equal highs. Remember, we said that as long as it gives us over a 2-to-1 risk to reward ratio, then it's considered a decent trade. Okay, so now going to the 1 minute, we look at the price action. Okay, we will not enter anything above 50%. So you could put it anywhere here, 60, whatever, but 50% is the minimum, and that's why I put it at over here. So when price came down, see if it leaves without you, it leaves without you, right? Because there's a fair value gap right here, this red line, where it bounced off of, but it's not discount. So remember I said, what am I looking for? In order for price to go the direction I want a soup, which is a liquidity sweep inside fair value gap, but I also need a manipulation to take people out of their contracts. So when price is moving around dancing like this, we're establishing that we had creating liquidity to the upside. Remember? So we're creating low resting liquidity. None of these were taken. So get a rejection on this trend line one more time. And we come again. And then we come down. You see how this trend line created a lot of resistance right here, which is now liquidity. We come down to the fair value gap from the 5 minutes or the 1 minute, either one, and we see how we get rejection. And a red 2 down doesn't necessarily mean it's going to continue, but I said it could continue or it could reverse. So this is why I put the limit order right there and a stop loss a little further down, because it could continue a little bit down deeper to take out a little bit more fair value gaps down here, or just to rebalance a little bit more into a bigger discount. And this is the trade that we all entered together. And as you can see, we pushed up and we finally break the trend line over here. And then I think I exited it once we hit these relative equal highs right here, only because of where we were in the day. But in retrospect, there was no reason to get out just because we're dancing here a little bit. There was no reason to get out because these relative equal highs were my initial, was my initial target. And so when price continued up, we hit the relative equal highs, and that was a huge, huge, huge trade where we bottom ticked. That's why I wanted to share this trade again. And it was so fresh at that time. And sometimes you need to review the trade again, because we did exit right here. And now in retrospect, we're looking at it, we had to go a little bit higher to take out all the targets. Okay, and after that happened, we did push up a little bit higher, but nothing really, you know, ooh, we did push up higher to the very highest, right? So, but you see how this was already a great trade, and then we broke and we retested this fair value gap after we displaced above it. We came back where? To equilibrium. And we swept the liquidity in order to, and then we had a sweep of liquidity with the green 2 down. And that's what allowed price to continue in the direction, right? So that pullback gave you a reason to reverse, which happens to be at the former resistance, now support. Former resistance, we broke out to support. We swept internal liquidity in order to continue up to low-hanging resistance. And we ended up going to the external draw. External draw, which is crazy because this all happened during power hour. All right, so, but price ended up coming where? To take out liquidity, and it ended its day. Yeah, we caught the bottom. You see how we caught the bottom? But this is what it literally pushed to the very end of power hour, which is crazy. I didn't know that. I think we just finished our day right here. But you see how we bottom ticked this bullish pattern right here? We had the inverted head and shoulders. Remember, we're now looking back at it, how head and shoulders looks. Right? We had a high, a higher high. We come back to discount and we break our neckline, retested it, and we took out sell side liquidity. And you do that both directions. Okay. But this is me labeling it. It's just giving us um, a reason and a cause and effect in order to get into your trades. Because obviously in hindsight, you'd be like, oh, inverted head and shoulders, bullish. But a lot of times people don't tell you how to get in. And by labeling it and giving yourselves these criterias, we timed the bottom. We're able to time the bottom. And if it goes lower, it goes lower, right? And then we know that we got to get out of the way until it takes these targets out. Or if it gives you another opportunity to take these targets out. So that's why I think that what we did was pretty good. We sniped this bottom. We got to it right here. We just got it like about 30 points or something like that. But it ended up going 200 points. 200 points. That's crazy. But it is what it is. That's how you trade. And now we got back to right here. This is still very bullish. So going into next week, we see what do we look for? We look for, has the narrative been taken? Did we sweep internal lows? We swept internal and we reacted it from it. Green 2 down on the 30 minutes. Let's take a look at the hourly. All right, we just had a small candles, but we made this displacement up, creating bullish fair value gaps. So what I would like for price to do going into next week is find a way to at least take these out. And if we take these out, we might come back here and we might push even higher here. Okay, and this can create another low, lower low, higher low. Remember what we just saw earlier? This could be potentially another inverted head and shoulders, but on a bigger time frame. And see how we displaced down, we broke structure right here. We came back to discount. And now if we do displace lower, perhaps, just like what we saw, we might retest and continue down to take out liquidity, which happens to be buy side liquidity. So this is how we just continue to rinse and repeat. Like I said, now we look at a bigger time frame, 4-hour, daily. What does this look like? We had a low, a lower low, and did we just create a higher low? What we could do though, is what happened to us on Friday, is that it looks like this, right? A daily green 2 down or 3 up. So we're looking for us to push up. But if we do pull back even more, what do? We take this low, perhaps. We take it to this high. And there just so happens where we had this 3 up, we broke structure to the upside. So if we do just kind of come up a little bit more and we dip down, remember what we're looking for is a manipulation. So we could come down to discount, and if discount gives you a fair value gap, then that could be an opportunity for us to do the exact same thing. Okay. If That's why I said that these candles are fractal. These candles all do the same thing on different time frames. So that's why we don't want to just guess and anticipate, but we want a reason to trigger us to go long because we have a clear risk down here. There's no other fair value gaps. So if we do just fake this and just immediately come down, that's the manipulation. And just like how I used the Bollinger Band right here, is that we could come down, reject, or we could just treat this like a bull flag. The only problem is I don't like how this angle is for this longs just yet. But what we could do is we could break out here and then run into this fair value gap. Okay. And then come right back down. Okay, so this is where we're the zone that we're messing with right now because we have fair value gap here. We have the border walls right here, and it's squeezing a little bit. We are slightly a little bit over, almost, we're in the midline actually, so we could rip up, but we're not going to guess. We're just going to go by based off the direction of what the candles are giving us. So weekly, overall weekly, we're just kind of in a range. Buyers stepping up, but nothing is set in stone until we take this first target out up here. So that's why I think that this fair value gap is going to be important for us to see how price reacts. Do we want to reject? And if we do reject here, what does that mean? We established that we made a lower high, and this could be a 3 drive where we have a high, a higher high, and we could reject this. So just giving us possibilities of what could happen. All right, we have 1, 2, 3, and then we could do a market structure shift. 1, 2, 3, market structure shift, lower high, take us even lower possibility. We don't know. Just like right here, high, 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 displays down, take out all the targets down here, right? So we don't know, but we could play both sides, just like we did on Friday. I played a short and then I played a long. So does that make sense, Bill? All right. So yes, that makes sense. Awesome, awesome, awesome. So many different things to yeah, like the possibilities. But that's the one thing we did establish is that we did create a breaker structure on the daily and we did come to fair value gap, but we're not back at discount. So if we can come all the way down here sometime this week at 18,912, which is like 700 points, then possibility that the second week of September, we could just make that huge rally. Let's say we come all the way down here to end the week. We're like, oh no, we can make that huge rally to all-time highs again. Okay, so we don't know, but what I do like is that we started a breaker structure and it will give us an idea as the week kind of um continues. Okay, so let me just stop the recording because that's a pretty good class in itself. So let's stop the recording there.